Since the beginning of the pandemic, we've seen some crazy returns and a couple rough patches from the biotech giants Pfizer and Moderna, both of which are known for their vaccines and have come into the public eye even more than before based on their revolutionary vaccines. While both companies are huge names in the fight against coronavirus, some investors are wondering whether these companies will be good investments after the foreseeable future of the pandemic. So today, we're here to answer the question, is it too late to invest in Pfizer and Moderna? Before we get started, I'm definitely not a doctor and I'm also not a financial advisor, so this video is just for fun, pure speculation only, but with that said, let's dive into it. So the first thing we're going to talk about is this concept of being priced in. If you've been a Wall Street survivor for a while now, you know that stocks are priced according to their future cash flows. The only problem with using discounted cash flows to price stocks is that we don't actually know how much cash companies are going to produce in the future. So basically, we have to make an educated guess about how companies are going to perform financially in the coming years. This is not an easy thing to do. Obviously, financial analysis is super complicated, and thousands of people dedicate their entire lives to this. However, generally, if there's a consensus among these financial analysts, the stock's price sort of tends to gravitate toward that range or that number. For example, let's say Microsoft is currently trading at $295 a share, and a large majority of financial analysts come together and say, we think Microsoft should be actually trading at $300 based on their future cash flows. After the analysts come out and say this and publish their findings, you should see that Microsoft's price increases to around $300 as investors rush to take advantage of what is being called an undervalued stock. And if the financial analysts were right, then you should expect to see the stock price stick around $300 when Microsoft reported their next earnings. However, if they were wrong, based on Microsoft's next earnings, you'll probably see a price increase or decrease accordingly. The point of saying all of this is that just because a company is doing well doesn't necessarily mean that their stock price is always going to go up. In order to generate returns on your stock investments, the companies you're holding can't just do well, they have to do better than what the market is expecting them to do. So if the whole world already thinks that this company is magical and is going to continue to make a ton of money in the future and perform super well financially, it doesn't necessarily mean that stock will perform well because, well, in that case, the future performance of the stock is already priced in. The stock would have to perform even better than analysts and the market expectation in order for you to really be able to profit. So that's the concept of something happening in the future already being priced in to the market's expectations and current stock prices. So this leads us to the point of saying, well, if Moderna and Pfizer and these other biotech stocks are already so ingrained in the public eye, are their future performances already priced in? Or are they undervalued and potentially is there a chance to make some profit here? First, let's talk about Pfizer. Pfizer was pretty much already a household name in the pharmaceutical industry before COVID even happened. Their vaccine was the first to gain FDA emergency approval, and so they sort of had a first mover advantage. Across the industry, analysts are currently rating Pfizer as both a buy and a hold. The market sentiment seems to reflect that COVID isn't going to go away tomorrow. There could be variants or booster shots needed, and so Pfizer still has the opportunity to remain on the forefront of the public mind and continue to innovate to help us fight against the pandemic. In fact, this year, the vaccine is supposed to make up about 42% of Pfizer's revenue, so you could say that Pfizer is fairly dependent on the vaccine for this year's expected financial performance. But if COVID were to go away tomorrow, it doesn't necessarily mean that Pfizer's stock price will fall through the floor. They're making some smart business moves behind the scenes, such as acquiring Trillium, which has 100 drugs at some stage of trials, with 23 already in the third phase. So this helps diversify Pfizer's portfolio out past just the pandemic and hopefully gives them legs to stand on for a longer future in the pharmaceutical industry. So they definitely are making some long-term moves that could make Pfizer still a good long-term buy. Now let's talk a little bit about Moderna. I personally had never heard of Moderna before COVID-19. Its stock price certainly reflects that, as it's gone almost 20x in the past year and a half. Moderna has been distributing their vaccine in the United States, but they're also doing it abroad, making deals with other countries in Europe and South America, which helps boost their sales as the American population continues to get more and more vaccinated. And as the market speculates that younger people could be getting vaccines, Moderna would also have a chance to up their sales in that target market. As far as the long-term plan goes, Moderna is also working on over 10 products that could mean protection or treatment from other viruses for which we still don't have treatment. As these vaccines and other drugs go through clinical trials, Moderna could still have some upside potential in the future for their stock price. Moderna is also seeing mostly buy and hold ratings from analysts across the industry, so that's generally a positive sign for the stock long term. Now, I get it. Sometimes it's hard to listen to analysts and their opinions seem like financial jargon. So when I'm confused about what an analyst is saying, or I don't want to read through all the financial jargon, I often look to the Motley Fool to help me decide which stocks I want to add to my portfolio. In fact, their average stock pick is up over 500% versus the S&P 500 since the product started. If you want simple analysis in plain English with direct recommendations of what stocks to buy twice a month, check out the link in the description below for the Motley Fool. Right now, they're offering half off your first year of Motley Fool subscription. Normally, the Stock Advisor subscription is $200 a year, but they're offering it for just $99 for your first year, which includes 24 fresh stock picks backed by a team of hundreds of analysts and years of financial analysis and experience at the Motley Fool. So again, if you're interested, check out the link in the description below. Okay, back to the video. So in short, if you had invested in Pfizer or Moderna at the beginning of 2020, you would have obviously made a huge return, especially with Moderna. While those huge jumps in price might be behind us, with booster shots and continuous news about the variants, there still may be room for future revenue due to this pandemic. But even if they don't continue to grow that much because of the pandemic, like I said, they're diversifying their businesses and making moves behind the scenes to ensure that they have other revenue streams that are supporting their business model, taking advantage of the influx of cash they have now and using it to invest in the future of their business. Overall, analysts are pretty positive about these stocks, and so they could make a great long-term buy opportunity depending on your opinion and, of course, doing your own research. Thank you guys so much for watching. Make sure to subscribe to the Wall Street Survivor channel, and I will see you guys in the next video.